Hey everyone, Couch Investor back to another SoFi video for you today. So yes, another SoFi video for you. Now, this is not going to be some kind of pumping video where SoFi is ready to go to the moon, we're going to $30, blah, blah, blah. No, nothing like that. Nothing is really going to take SoFi right now to $30. This is just going to be an update video and a little refresh for those that have missed it. We're going to have a look at the graph and how our cup and handle pattern has evolved in recent weeks. We're going to have a look at the insider selling, talk about why this bank charter is extremely important for SoFi because it will change the business drastically, and then a little refresh on why the Galileo part of the business is actually the most exciting one. So if you're interested for all of that, just sit back and relax, maybe hit that thumbs up button. It really helps me outgrow the channel and get my videos out there. And if you haven't subscribed to this channel, I will try and finish this year at 20,000 subscribers. So if you haven't subscribed to this channel, maybe hit that subscribe button. I will really appreciate that. So without further ado, let's jump into the first topic of this video, insider selling. Alright, so I'm here on Simply Wall Street. We can see here very clearly insider trading volume. Now, most of you that have followed SoFi and watched my videos in the last couple of weeks know exactly who sold those shares. 3 companies and 2 individuals. The 3 companies, you probably know exactly who those are. SoftBank, Silver Lake Management, and Qatar Investment. Those were the names mentioned in the last offering. And then the individual one is actually the same person. It's Clay. He sold over $200 million worth of shares, once at $15.16 and then more recently at $21.6. Now, if you look at all the selling activities for the last 3 months, you might say, yes, maybe that's why the stock has gone down a bit because it's close to $1 billion in value. So maybe that's why the stock has fallen. Maybe in a sense, yes, but I really wouldn't say it's just because of that. The market sentiment has also changed. Fintech stocks in general have taken a major hit. By the way, if you're interested in PayPal, that might be my next video, so stay tuned for that. So just in this case for SoFi, yes, there has been some insider selling. Yes, there was an offering. We've had actually great earnings, just market sentiment has changed. So maybe that's why, probably the main reason why the stock is down. Now, before I go into the graph, just a little reminder of what SoFi is. SoFi's main goal here is to get your money right. And if you have the app on your phone, you know that when you open the app, it tells you 3 things. It gives you 3 pieces of advice. 1, what you must do, what you should do, and then how can you improve your financial well-being on that same day. Why is SoFi doing this? Because this is their mission statement, to get your money right. Now you might say, right, this is fine and great, but doesn't SoFi want their users to spend more money, to interact more with each product? I would say yes, but in a more responsible way. There's no reason for SoFi to push people to start gambling because at the end of the day, that business model is really not sustainable. Yes, casinos make most of their money that way, but a company like SoFi will probably go bankrupt if people start gambling their money because eventually they'll have to repay some of that money. If it's payments back on interest, if it's lending, etc., that just won't work with SoFi's business model. Now, before we have a look at the graph, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so continuing on our cup and handle pattern, we can see that, well, it's still in play. It's bouncing off that yellow line right here. But the negative thing is that we are now under the 200-day moving average. And that's usually not a very good sign. We can also see that the RSI and the MFI are both on the downtrend. No signs of a recovery as of yet. And with the market sentiment, with those fears of the new variant, etc., I don't really see any reversal anytime soon. Right, now let's talk about the bank charter, because right now SoFi relies on bank partners to offer various solutions such as SoFi Money. Now, if they do get that bank charter, they'll be able to provide deposit accounts to their members. They'll be able to lower interest rates and give others higher interest rates as well because they control it all. More money flows inside of their ecosystem, the better control they have and the better service they can offer to their members. Now, yes, you can compare SoFi to maybe Square and Cash App, but let's not get ahead of ourselves because right now, Cash App, they have what, 40 million monthly active users. Right now, SoFi has close to 3 million members. So it's still very, very different here. Yes, you might say that's why the market cap is so different, but I really don't think that SoFi is going to go after what Square is doing. Square is just in another league. SoFi will stay in their niche. That's what I believe. Might be a $100 billion company in 10, 15, 20 years from now, but it's not going to happen anytime soon. I think this is something that a lot of people really should put in their heads. This is not going to be the next Square. SoFi is going to be SoFi, and that's it. And this goes into my next point and what makes SoFi so special and why SoFi should not be seen as the next Square. SoFi is SoFi, and SoFi is great because it has Galileo. Galileo is just another business that will just be immense in the future because it is here to help the fintech industry. The more neobanks there are and that use Galileo, the better that business will be and the bigger SoFi will become. Now, if SoFi becomes a bank, they will be able to help those other fintech companies that use Galileo with the same thing, credit cards, deposit accounts, better rates, etc. And if you still need a little refresh on who Galileo powers, maybe you've heard of some small companies like Chime, Robinhood, MoneyLion, Wise, and probably others as well. So they're not powering little guys here, they're powering huge fintech companies. Alright, to conclude, has something changed fundamentally for SoFi in the last couple of weeks? No. Is the stock down? Yes. Why? Nothing related to the business itself, so who cares? Are we still waiting for the bank charter? Yes. Again, when will that happen? We don't know. Probably anytime soon, maybe at the beginning of next year, maybe at the end of this year. Who knows? Again, when this happens, the business as SoFi right now will change drastically in a positive way. Now, keep an eye out on market volatility, keep an eye out on the chart. If you're a trader, if you're an options buyer, look at all of those things. But for the long term, SoFi is on the right track. Now, don't try and compare it to the likes of Square and Cash App because it's not the same business and it's not going to become the same business. Stop looking at, oh, Square is at 100 billion market cap, so SoFi eventually will have to catch up with that. No, that's not how it works. So hopefully this clears up some couple of points. Let me know down in the comments below if you've been picking up some SoFi shares in recent weeks. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.